Citibank reported their earnings this morning. They came in at $1.29. That's versus an expected $1.17, and the market likes what they see. So, Jim, when we take a look at this quarter, there were quite a few good things that were going on. They had revenue growth in Latin America, which I really liked, and the deposits group. But they said they're cutting 11,000 jobs.
Yeah.
And they said things are going to be challenging this year.
Yeah, I mean, Corbat, new CEO, obviously, he's trying to put his imprint on things. It's nice to see them under-promise, so they might be able to over-deliver. He did use a lot of challenges. Not sure about the housing market. Citi not as big in housing as Wells or J.P. Morgan. Citi has a tremendous advantage in that it's a worldwide bank. If the world economy comes back, Citi's the best chit. I actually believe in their book value, and I also like the fact that Citi Holdings is now a minimal part. Citi Holdings is their bad loans. It really is rolling over rather rapidly to produce some revenue. All in all, Deb, this is an improvement story continually. Net interest margin good. Now you could say, listen, all it really is just the continued decline of the lost reserves. But you know, these banks make money. They make money every single day, and we may have a new normal paradigm developing where banks make money, don't make a lot of bad loans, do okay, may not be growth stocks, but are not horrible.
Well, it's funny you say that, because I was just having this conversation this morning with someone else where I was saying, you know, banks used to be like a utility. They made some money, but it wasn't crazy fat money. And then they got into the brokerage business, the prop trading, and they got so addicted to that big money that now it's like they're kind of going back to the old days, and it's been a tough adjustment for them.
I think that's right, and that's one of the reasons why they don't need as many people. Also, you remember, you can lay off people after you've reworked the loans. We saw that in Wells. When I went over the Wells quarter this weekend, I could see that why people say, listen, it's not just the mortgage. There's a lot of other businesses. 87% of the business isn't mortgage. Each one of these banks is developing a bit of a characteristic. JP Morgan, credit cards and capital markets. Wells Fargo, cross-selling. Citi, emerging market. Remember, they're big in Mexico, big in Brazil. Each one is defining a characteristic that makes them so that they're not as homogenized. I think that Citi can begin to return capital. Wells boosting that dividend. The dividends can all be much larger for these guys. Now, I know the Fed is in control of that, but I'm kind of happy. You know, a lot of people sell these stocks after they report their quarters. It's not happening this time. I'm putting Wells as being pretty good, JP Morgan as being really good, and Citi as being almost great.
We've got Bank of America coming. You know, the financials have lagged this rally.
Right.
Are you expecting similar quarter out of Bank of America?
Yeah, Bank of America could be good. I mean, Bank of America is going to still has a lot of lawsuits, but Bank of America should be able to get rid of trim back the people who are literally just doing nothing but reworking loans. Don't forget, the price of housing going up has helped everybody immensely. Wells Fargo in particular, because they bought this big Wachovia portfolio, and it looks like it's really sprung back to life. Wells on the surface look not that great, and underneath look great. I have to do more work on Citi to see whether Citi looks great and underneath is not that great, but I like what I see.
All right, well, it sounds like you would be maybe bullish?
I would buy Citi, yes.
All right, so there you go.
Yeah.
Ultimately, Jim would buy Citi. You know, the financials, as we said, have lagged this rally, so there may be some good entry points here for Citigroup.